Creamer Media's Mining Weekly is interviewing Alistair Muller, a partner at Partners in Performance, the global strategy consulting firm that works on business performance improvement in asset-intensive industries, leveraging data and AI capabilities. Hi Alistair, it's great to chat to you. I'd like to kick off this interview with this question. What's the general outlook of the platinum group metals market?
Very pertinent question. And not only pertinent for the PGM operators within South Africa, but also South Africa as a whole. PGM exports make up a significant portion of our GDP, and therefore any impact or movement on the PGM market also affects South Africa's economy. In the short term, the PGM prices are expected to remain suppressed and fairly volatile, but in the medium to long term, things are a lot more optimistic, and that's driven in part by battery electric vehicle uptake being a lot slower than initially anticipated, so it allows miners to buy a little bit of time. Plus the potential ramp up in the future of green hydrogen is the obvious one, where platinum is required in your electrolyzers and your fuel cells. And there's other new applications where there's definitely potential for PGM usage, for example in the medical sector, chemicals and industrial processes. Then on the supply side, there's projected by the end of the decade to be a 20% reduction in supply. And this is largely driven by, from a South African perspective, mining conditions becoming a lot more difficult, as well as people not investing in new projects, so no new projects will be coming online. So this supply-demand dynamic actually bodes well for PGM prices and the full basket in the medium to long term.
And how are operators reacting to this, and how should operators react to these market dynamics?
Again, good question. So operators need to remain resilient, and this is in order to survive during the short-term volatility, and also ensure that when they do get through this period of uncertainty, they come out stronger on the other side, so that they're well positioned to take advantage of the higher PGM prices. And how to do that? Firstly, you need to optimize your cost base. In order to optimize your cost base, you need to look at typical things like your continuous improvement, enhancing productivity, which will then reduce costs. Also things like taking or embracing technology and digitization, so that when you enhance productivity further using these technologies, you can again take a chunk out of your cost base. Obviously, this has a bit of an impact on the labor force, so this needs to be done in a somewhat responsible manner, where you upskill workers, and when you do transition to a more modern mine, that it has as little impact as possible on the labor force. And finally, what I would say is capital portfolio optimization is key. You need to ensure that any capital that you are spending is being sent to the right areas. And when you're looking at your financial metrics, for example, NPV and other important metrics, they do focus on the right projects. When they are selected, you need to effectively manage those projects and ensure that they come within budget and on timelines. And I think it's important.
And how should the platinum group metals industry react to the global tariff volatility?
Tariffs is very close to mind at the moment, with Trump in office. So when you think tariff, there's a lot of tariffs that are going to impact the PGM market. The most probably critical one is Trump has imposed a 25% import tariff on automotive vehicles into the USA. What that means is when your demand for vehicles is going to drop because they're becoming more expensive, and because of that, your PGM demand will drop and prices will drop. In Europe, diesel cars are more popular than in the USA, where it's petroleum. So as far as diesel goes in Europe, your platinum is not going to be as hit hard, because platinum is used in your catalytic converters of your diesel engines, as opposed to palladium and rhodium in your petroleum cars. So how should miners and operators react? Very good question, and we refer back to they need to be resilient, take out costs from their base so that they're a robust business going forward. Market development should be front of mind so that they can continuously look for new applications in order to shift some of their risk. And maybe lastly is, in these chaotic times, there's also opportunities. So we are fortunate enough to, in terms of revenue, contribute 70% towards the global PGM market. And because of this, we're in quite a strong position to maybe not negotiate, but we could dictate certain terms. So instead of being price takers, we could more so say, okay, if you want this product, you're going to have to pay for it. And you can do that with supply, cutting, etc.
And what's the outlook of energy transition and its impact on platinum group metals?
Okay, so we need to refer to America a lot as the dominant global economy. America has, via Trump, pulled out of the Paris Accord, which means there's not as much pressure on decarbonization, which could dictate some of those trends. What this means is there's a lot of positives and negatives that are driving energy transition globally. In terms of positives, let's start with the negative. So battery electric vehicles, the uptake hasn't been as swift as initially anticipated. So it buys the miners and operators a little bit of time to get their ducks in a row. But on the positive side, there are actually many positives. So in terms of, we've spoken about green hydrogen, you need your platinum in your electrolyzers as well as your fuel cells. There's many other new applications that will warrant the need for PGMs, such as in the chemical applications industry, in industrial applications. You've got in the medical sector. So it is thought that the decline in PGM demand from the auto catalyst side will be offset by these new applications. So it's expected that the demand will remain fairly constant going forward. Now, what this means in terms of energy transition is that, yes, there's pressure to decarbonize, but there's also other things that need to be done. So PGM is also critical, as we said, in new applications like green ammonia in the renewables sector and potentially in the medical space. And what that means is that offset will balance out what we've lost from the auto catalyst side of the demand. There's other ways to decarbonize besides moving to battery electric vehicle. There's also either you can use biofuels or renewable diesel. And why this is potentially favored in an African context is because renewable diesel provides socioeconomic benefits and jobs for communities. And also the capex up front is nowhere near as significant as what you need for, say, a battery electric vehicle change. So this, again, not saying that the energy transformation is an no-brainer or easy way to go, but there's pros and cons, and the market players need to carefully consider their options going forward.
And finally, Alistair, what's the big takeaway?
So with all the noise, operators should focus on what they can control because there's so many factors at play. So as I said previously, building resilience and robustness in the business is extremely important. Then, in terms of market development, operators should collaborate across the industry to find new applications for PGMs, which will also further boost demand and therefore prices. And finally, in times of chaos, there's always opportunities. So again, collaboration across the industry, across key PGM players is critical in order to not only find other opportunities, but also look at supply. And by tweaking supply, you can obviously impact costs. So it's a positive story going forward, but it's only positive if the key mining players are focusing on the right things, and that is critical.
That was Creamer Media's Mining Weekly, speaking to Alistair Muller, a partner at Partners in Performance, the global strategy consulting firm that works on business performance improvement in asset-intensive industries, leveraging data and AI capabilities.